Okay, let's unpack this. We're diving deep into a book that offers a pretty unconventional take on succeeding in investing. It's Guy Spier's The Education of a Value Investor.
Right, and we've got some great source material here, excerpts, summaries from the book itself. And what's really striking, I think, is how personal it is from the get-go. It's not just theory.
Exactly. So our mission today is really to explore Spier's journey because, well, his main argument is kind of provocative. He says the biggest challenge in mastering the market isn't, complex analysis or predicting swings. It's actually you.
Mm-hmm. It's about your own psychology, right? Your biases, your values, how you handle yourself. And his story starts with this really raw moment, admitting he was disgusted with myself early on back on Wall Street.
So the hook here, the thing to think about as you listen is this. What if the biggest obstacle isn't out there, but in here? Spier makes a really compelling case that this is ground zero. Let's jump in. So where did this all start for Guy Spier? What was the core problem he was wrestling with that kind of set him off on this whole education?
Well, it definitely started deep inside him. He talks about his younger self, working at a specific kind of investment bank, and feeling like he was just embodying the absolute worst of Wall Street culture. Brash, short-sighted, entirely out for himself, his words. And that feeling, that disconnect was so strong, he actually said, yeah, he was disgusted with myself.
Wow. And that disgust wasn't just, personal navel-gazing. It sounds like it became a lens to critique the whole financial system he was in. He mentions being completely disillusioned by the culture of greed and short-term thinking.
Mm.
And that disillusionment really pushed him, didn't it, to find what he called a more meaningful approach. It wasn't just about getting a new job.
No, it was about finding a whole different way to operate within finance. And this is where his core insight really starts taking shape. He began to see that the real difficulty wasn't the market itself. The volatility, the craziness. The real battlefield was internal.
So those classic mistakes, chasing hype, selling in panic.
Exactly. He saw those as symptoms. Symptoms of, deeper psychological flaws, maybe even ethical gaps within the investor. His transformation genuinely kicked off from that negative self-view, that deep unease with himself and the whole environment.
And this education, as he frames it, it obviously gave him powerful insights about investing in business. Okay, that makes sense. But he keeps coming back to the life lessons and these really profound self-realizations. It sounds like the answer he found wasn't just a better investment formula. It was about fundamentally changing himself, becoming a more authentic version of myself.
Precisely. Kind of flips the usual script, doesn't it?
Yeah.
The problem isn't just the complex market out there. It's the, let's say, untutored human psyche in here. The book is almost a manual for fixing the investor first, because the assumption is a better, more self-aware investor will naturally make better decisions.
Okay, so the problem is the investor's internal state. What's Spier's big idea then? His core thesis for tackling this?
Well, his thesis is pretty holistic. It's basically that lasting success in investing isn't just about being analytically brilliant or having the best data. Instead, he argues it's something you have to consciously cultivate. It emerges from deep self-awareness, knowing your triggers, from deliberately building an optimal environment for making decisions, and, crucially, from sticking to your authentic values. Put all that together, he says, and that's how you build a rational, resilient, genuinely long-term investor.
So this education he talks about, it's really a journey towards authenticity. He hammers this point home. Self-knowledge isn't a nice to have, it's so critical.
And it wasn't just talk. He actually took concrete steps based on this. He physically changed his environment, his work habits, even who he associated with. A lot of it inspired by mentors like Warren Buffett. And it implies that things often dismissed as soft skills, self-awareness, ethics, even gratitude, are actually fundamental components for long-term durable success.
Any philosophy this deep usually rests in some foundational beliefs, right? What are the core assumptions you really have to buy into for Spier's approach to make sense?
Yeah, good question. The first big one is definitely what you could call the primacy of self-knowledge and ethical congruence. You have to accept that who you are as a person fundamentally shapes how you invest. Full stop. If you don't get a handle on your own biases, your emotional weak spots, your ethical lines, then just being good at spreadsheets won't cut it for long-term sustainable success.
It's almost like saying character isn't just related to capital. In his view, character is a form of capital.
That's a great way to put it.
Exactly.
That's why he keeps returning to self-knowledge being so critical, and his personal goal being to become a more authentic version of myself.
Mm-hmm.
The mere fact that he dedicates so much space to self-awareness, gratitude, and ethical conduct in a book about making money tells you he sees them as foundational pillars, not optional extras.
Yeah, you really get this sense of a deeper dimension. Like the education isn't just financial, it's almost moral, psychological development. He uses these big phrases, transformative enlightenment, talks about self-transcendence. And that initial disgust he felt, his search for meaning, it clearly went way beyond just wanting better returns. Even that famous lunch with Buffett, it feels less like a networking opportunity and more like seeking wisdom from, well, a sage.
Absolutely. So the underlying assumption is, you don't optimize your investing just by optimizing your portfolio models. You optimize your investing by optimizing the investor holistically. Ethics, psychology, the whole package. It's framed as a path of personal growth.
Okay, that's a big one. What's the second major assumption?
It's all about the environment. Specifically, the belief in its immense power over your decision-making and your ability and necessity to shape it. Spier's philosophy really hinges on the idea that you must consciously architect your surroundings, physical, social, informational. Because, and this is key, he assumes willpower alone is just not enough to consistently overcome our built-in psychological flaws and resist negative influences.
So he didn't just grit his teeth and try to be better on Wall Street. He fundamentally changed the game for himself by building this investment oasis.
That's exactly the concept. He talks explicitly about creating the right physical, geographic, and social environment to flourish as an investor. And he gets really practical about it. Things like create the right environment and network. Be super selective about whose opinions you let, and he famously avoids most CEO chats. And be incredibly disciplined about the order you consume information. Primary sources first, like filings, broker reports, way last, if at all.
It really reframes the investor, doesn't it? Not just as someone who makes decisions, but as someone who designs the very system in which they make decisions. You know, standard economics often just assumes rational actors, but Spier, having lived it, saw how easily pressure and environment crushed that supposed rationality. The solution wasn't just internal discipline, it was external restructuring. That move to Zurich is the prime example, getting away from the noise, the herd mentality.
Precisely. And that move underscores the core assumption. Rationality isn't some fixed trait you possess. It's cultivated. It's nurtured by carefully managing your inputs, your surroundings, your social interactions. The environment isn't just backdrop. It's a critical load-bearing component of your ability to think clearly.
Okay, so his personal journey redefined who the investor needs to strive to be more authentic, more self-aware. What about the how? What's the actual machinery, the practical operating system he uses to put this philosophy into practice day to day?
Right, this gets us into his sort of mental operating system. And pillar number one, the absolute foundation, is what we call the authentic investor's compass. It's this relentless commitment to self-discovery. And then making absolutely sure your investment strategy aligns with who you genuinely are, your character, your values. It means shedding that urge to just imitate others, even someone like Buffett. His goal, he stated, became not to be Warren Buffett, but to become a more authentic version of myself.
That quote stemming from the Buffett lunch feels like it's the absolute heartwood of the book, doesn't it? This became my own goal, not to be Warren Buffett, but to become a more authentic version of myself. As he had taught me, the path to true success is through authenticity.
That's powerful.
It really is. Think about it like a master chef, maybe. They learn the basics, sure, but eventually they develop their own style. It's based on their deep understanding, yes, but filtered through their unique palate, their personality. They don't just copy recipes forever.
And crucially, this authenticity isn't like a final destination you arrive at. It sounds like an ongoing process. Totally. He's very clear he didn't start out this way.
Yeah.
He paints himself early on as this Gordon Gekko wannabe, pretty much the opposite of authentic. His education is explicitly about transformations and self-realizations. It's dynamic. It's about becoming a more authentic version. And learning from mistakes, which is huge for him, is central to that refinement process. Authenticity isn't achieved, it's maintained. It's a constant alignment.
Okay, authenticity is the compass guiding the ship. How does he actually steer through the choppy waters of the market? That's the toolkit, right? The mental models.
Right. The toolkit is how you navigate using that compass. And the first big tool, we've touched on it, is the engineered environment, that investment oasis.
Describe that again. It's the deliberate design of everything around you.
Yeah, your physical space, who you talk to, what information you let in, all designed to minimize emotional static and foster clear, independent thought. His move to Zurich is the classic example, but it plays out in smaller ways too.
Like those practical rules he follows.
Exactly. Create the right environment and network. Being ruthless about whose opinions matter, avoiding most CEOs, filtering news, disciplining how you consume information, raw data first, opinions last. He didn't invent the term investment oasis, but his actions embody it perfectly. It acknowledges that willpower alone just isn't reliable. Rationality becomes almost an environmental property you cultivate.
Okay, environment is tool 1. What's the next part of the toolkit?
Tool number 2 is the personalized investment checklist and strict process discipline. This is about developing and then rigorously, almost religiously, following a customized set of rules, procedures, and habits. And they have to be aligned with your authentic self, your circle of competence, your hard-won experience.
And he gives concrete examples of his own process, right?
Oh yeah, very specific. Things like checking prices infrequently to avoid knee-jerk reactions. That specific protocol for gathering info. We mentioned filings first, reports last. Strict ground rules for talking shop with peers. Absolute confidentiality, no telling each other what to buy or sell, declare any conflicts. Even rules about not doing things, like never trading right at the market open when emotions are high. And that post-purchase stress test. Could I stomach a 50% drop immediately without panicking?
It really does sound like Atul Gawande's checklist manifesto applied directly to investing. It's a system designed to short-circuit human inconsistency. Emotional overrides, forgetting key steps under pressure. It mandates discipline.
Exactly. And the third crucial tool in the kit is what you might call the margin of humility. This is simply the unwavering commitment to candidly acknowledging, dissecting, and genuinely learning from every single mistake. This is absolutely core to the education part of the title.
He's refreshingly honest about this. Quotes like, admitting mistakes and learning from failures is essential for growth, continuous learning, and adaptation. And he doesn't just say it. He discusses his own errors, like learning lessons big time in 2008 about underestimating credit risks.
Right. And this margin of humility is so potent because it directly counteracts ego and denial. Those are huge learning blockers, especially in finance, where admitting error is often penalized. Spier champions making peace with your fallibility as a prerequisite for getting better.
So these 3 tools, the engineered environment, the personalized checklist process, and the margin of humility, they don't seem like separate things. They feel interconnected.
They absolutely form a self-reinforcing system. Think it through. Your calm, engineered environment reduces the emotional noise. That makes it far easier to actually stick to your rational checklist. The checklist provides the clear rules of engagement within that calmer space. Then, inevitably, you still make a mistake. That's where humility kicks in. You don't brush it off. You dissect it. Was the checklist flawed? Did I violate my environmental rules? Was an assumption wrong? And crucially, that learning feeds directly back into refining the checklist, maybe adding new criteria like he did post-2008, or tweaking the environment. It's a dynamic, adaptive system built for continuous improvement.
Okay, so this integrated system, authenticity, environment, process, humility, how does it all come together to provide the psychological armor needed to deal with market chaos and, well, just being human?
By fostering those key traits: patience, discipline, a true long-term view, and a degree of emotional detachment from the daily gyrations. But the critical point here is that Spier argues these aren't just qualities you magically summon through willpower, like, okay, be patient now. Instead, they are the natural result, the outcome, of consistently living by the other pillars.
Right. He talks about practical habits that build this, like patience and discipline, deliberately resisting the temptation to trade frequently, learning to just discard short-term market fluctuation. And his whole approach is geared towards sticking to principles and aiming for long holding periods, like 5 years or more. Even having that rule, if a stock drops right after I buy, I'm mentally prepared to hold for at least 2 years. That signals real commitment.
Yeah, it embodies that classic value investing idea. Value investors wait patiently. They don't try to dance in and out. But the deeper insight from Spier is that this desirable temperament isn't innate. It's built. It's constructed piece by piece through conscious practice, through designing your environment for calm, through self-awareness, through disciplined processes. By creating these robust systems, both internal and external, exhibiting good temperament becomes, in a way, the path of least resistance.
It makes me think of like a seasoned ship captain in a storm. They aren't emotionless, probably quite focused, maybe even stressed, but they rely on the integrity of their ship. That's the environment and process. They rely on their navigation charts and knowledge of the principles, and their trained composure, the cultivated temperament. That's how they get through. The armor isn't being numb, it's being prepared and composed because your system supports it.
That's a perfect analogy. Temperament, in Spier's view, isn't something you just have or don't have. It's an emergent property of the whole system working together. Remember his description of his early self, brash, short-sighted? He clearly lacked that temperament then. His entire education, his transformation, was the process of building it.
So that calm, patient, long-term orientation isn't the starting point, it's the outcome. It's what naturally happens when you build a system designed to filter noise, reduce triggers, and align your actions with rational principles. Calm environment plus sound process makes patience easier.
Exactly.
Guy Spier's story and the philosophy that grew out of it, it's really compelling. But, the rubber meets the road in today's markets.
Yeah.
How well do these ideas, many rooted in classic value investing, actually hold up now? With all the speed, the hype, the complexity, where might they bend or even break?
That's the million-dollar question, isn't it? Let's stress test it.
Yeah.
Think about current scenarios, wild speculation in areas like AI or meme stocks, or those sudden sharp panics driven by geopolitics or economic fears.
Okay, so how does Spier's framework navigate that? Well, his deep focus on really understanding the business, needing clear financials, wanting companies that generate actual cash relative to their price, that inherently pushes him away from hype cycles, right? Like speculative AI companies with no clear path to profit, or things just way outside his defined circle of competence.
And his commitment to holding long-term, aiming for 5+ years, and deliberately not watching prices constantly. That's a huge shield against the daily insanity of meme stock volatility or panic selling based on headlines. He literally aims to discard short-term market fluctuations.
And that investment oasis concept seems even more relevant today. Building a filter against the noise, the hype, the emotional contagion spreading through social media or cable news, that seems invaluable.
Absolutely. Plus, that rigorous checklist demanding a margin of safety, a buffer between the price you pay and your estimate of value. That buffer is usually completely absent in purely speculative assets. And that mental exercise, what if this drops 50% tomorrow? That automatically makes you deeply skeptical of astronomical valuations built on hope.
So, okay, let's take a hypothetical hot AI stock. It's soaring, everyone's talking about it, but the business model is maybe opaque, it's burning cash. Spier's framework almost forces them to say pass, right? Regardless of the FOMO. But flip side, during a market panic where solid, understandable businesses get thrown out with the bathwater, his focus on intrinsic value could actually highlight buying opportunities if they meet his strict criteria. His principles naturally steer him clear of purely speculative zones because they just don't fit. Not understandable, no cash flow, no value.
Right. But where does the model potentially hit its limits or draw criticism?
Well, one interesting angle is Spier's own honesty about his evolution. He talks openly about past mistakes, blind spots like underestimating credit cycles, learning that big time in 2008.
Which is admirable, that humility. But it also implies the education is never truly done. The model he's using now might still have undiscovered vulnerabilities. There's always a potential tuition fee the market might extract through, painful lessons.
And there's that interesting contrast he makes, his advice for young people. He suggests they should take more risks, maybe even dabble in speculative things, given their longer runway and smaller capital base, which seems quite different from the disciplined, value-focused approach he applies to his fund.
Yeah, that distinction makes sense based on life stage and risk capacity. Longer horizon, less to lose, you can afford more experimentation. But it does highlight that even within his philosophy, the practical application, the specific checklists, say, isn't one size fits all. It needs tailoring to circumstances. Underscores how personal the education really is.
Okay, another big modern challenge. Technology. Classic value investing struggles sometimes with tech companies, especially those built on intangible assets, IP, network effects, data rather than factories and inventory. Critics sometimes say traditional value can end up being unintentionally short tech disruption.
It's a valid point. Spier's strong emphasis on understandable businesses with clear financials could naturally lead him to avoid a lot of disruptive tech, particularly early on when things are complex and financials are messy. That could mean missing out on huge growth stories. His focus on cash generation relative to price might only let him participate once a tech company is more mature, already profitable, fitting that specific mold.
So there's a real tension there. We live in an economy increasingly driven by tech giants with massive intangible value. Does his framework fully grapple with that? On one hand, his circle of competence discipline is a great defense against getting caught up in tech manias he doesn't understand. That's a strength. But the potential limitation is missing out on truly disruptive innovators where the future cash flow is highly uncertain, potentially enormous. His definition of understandable might be inherently conservative when facing rapid paradigm-shifting change.
It's a key debate. And finally, there's the question about replication. Spier had some pretty unique high-impact catalysts, that multi-million-dollar Buffett lunch, the elite Oxford-Harvard background. Can the average person, without those specific resources or experiences, really replicate this depth of transformation?
It's a fair point to raise. The counter-argument, I suppose, is that while the specific events were unique, the underlying principles he derived are potentially universal. Actively seeking out mentors, even if not Buffett. Committing to lifelong learning, practicing self-reflection. Deliberately engineering your environment, even in small ways.
You could argue the book itself acts as a form of mentorship by proxy.
Right. The core education isn't necessarily about replicating his exact life path, but about cultivating the mindset. Actively seeking wisdom, structuring your life and work for better thinking. The challenge then is for each of us, for you listening, to find your own catalysts, your own mentors, and build your own personalized curriculum for becoming a better investor, a better thinker.
Well said.
Okay, we've covered a lot of ground. Spier's initial struggles, his core philosophy built on authenticity and environment, his practical toolkit, the psychological armor it creates, and how these ideas fare in today's world. Let's try to distill this all down. What's the absolute essence, the core takeaway from the education of a value investor?
Well, when you look at how all the pieces fit together, that authentic compass providing the why, the toolkit providing the how, environment checklist, humility, and the psychological armor being the result, resilience, patience. You see, it's not just a collection of tips. It's a coherent, integrated system for thinking and operating.
The authenticity is the bedrock, right? Defining your purpose. The toolkit gives you the structure, the habits, and the armor is what you gain the ability to withstand pressure.
Exactly. And what's really powerful is that this system, this way of thinking, it transcends investing. It's really a blueprint for more rational, ethical, self-aware decision-making in any complex part of life where emotions run high and external pressures are intense. It's about consciously designing your life to support your best self, your best thinking, aligned with your values. As reviewers noted, the life lessons are valuable even if you never buy a stock.
So if you had to boil it all down to one single mental tool, one core concept to steal from Spier and embed in your own approach, what would that be?
For me, it boils down to this. The cultivation of an inner scorecard, prioritized resolutely over an outer scorecard, and crucially, supported by a deliberately architected process.
Okay, let's unpack that. Inner scorecard, that's the Buffett idea Spier really ran with, right? Success measured internally.
Yeah. It means judging yourself based on your metrics. Did I act with integrity? Was I intellectually honest? Could I stick to my values? Did I use my best independent judgment? It's about whether you believe you did the right thing, regardless of the immediate outcome or what others think.
Contrasted with the outer scorecard.
Which is all the external stuff. Is the stock price up today? Yeah. What are my peers doing? What's the media saying? What are my quarterly numbers? Spier's message, echoing Buffett, is crystal clear. The outer scorecard has to be secondary, firmly subordinated to the inner.
And Spier's key addition, his unique emphasis, is that the inner scorecard isn't enough on its own. It needs structural support.
Exactly. He shows that just wanting to live by an inner scorecard is incredibly difficult amidst all the noise and pressure. It needs active protection. It needs reinforcement from that deliberately architected process. That's his whole toolkit we discussed. The engineered environment, the personalized checklists, the habit of learning from mistakes. That process is the scaffolding. It's the support system that makes consistently honoring the inner scorecard actually feasible.
And why is that combination, inner scorecard plus architected process, so powerful?
Because think about where most major errors come from in investing, and probably in life too. They often stem from giving too much weight to the outer scorecard, chasing trends because they're popular, panicking because your short-term results look bad compared to others, getting sucked into herd behavior. Those external pressures hijack your thinking, leading to emotional, reactive, and usually poor decisions.
So Spier's entire education, in essence, was the journey of building both the internal fortitude, the inner scorecard, and the external systems the architected process needed to withstand those forces.
Precisely. It tackles the root cause of so much poor decision-making. Our own untutored psychology operating without a supportive framework. It really forces you to confront that fundamental truth. Right. To be a good investor, you first have to learn to manage yourself. Then and only then can you effectively manage a portfolio.
So the profound lesson from Spier's education is that sound investing, and maybe a sound life, is fundamentally an inside job. But it's an inside job that needs to be fortified, protected, and made possible by carefully constructing your outer world to support it. Well, that brings us to the end of our deep dive into Guy Spier's The Education of a Value Investor.
It really is a fascinating look at how personal transformation and practical process have to go hand in hand. A reminder that sometimes the biggest insights come from looking inward.
Definitely. And as you listening reflect on all this, maybe mull over this question for yourself. What are the core principles, the inner scorecard, that guide your journey? Not just financially, but in any area where clear thinking under pressure really matters.